What's going on, everybody? It's October 24th, 2022. Daily episode log 36, I believe. And today we're going to cover US 500 and what happened. I covered in the Telegram today a few things that did happen. We ended up not catching the overall long into the buy side liquidity at 38.06, which I was annotating from yesterday. I said we'd draw up into, which is perfectly okay. I think today was quite sloppy in the delivery of it, and there's a lot of learning lessons from today, especially if you trade the YouTube model, and things that I've seen from the YouTube model that are common mistakes, common, FOMO entries, and things that will kind of get you into the market without the right criteria. So let me go out to a daily time frame here, just so we know where we're at. So we reached up into the buy side liquidity, as mentioned yesterday in the weekly forecast. Just a side note here while we're watching price, I would annotate the volume balance. I know on ES, if I'm not mistaken, there is no volume imbalance. There's a small volume imbalance there. Somebody was messaging me today. This is just a little side note. I don't mean to be rude or anything, but please do not message me during New York session. It's one of my probably biggest pet peeves. I don't want to have my attention elsewhere. It's already enough to look at the charts and be trading and posting inside of the Telegram, let alone trying to respond to others. I'll get back to your message after New York session, or just send it after New York. That way I can get back to you in a good manner. But on ES, there's not the same volume imbalance as US 500. Now in these situations, I just trade what the chart is giving me. So I'm trading US 500, I'm using that volume imbalance. If it doesn't show it on ES, don't use it. You can reference US 500. I honestly don't think volume imbalance, I mean, it is a huge factor, but the model, regardless, is not going to use the volume imbalance as much as you really think. Okay, so it's just something to note, something to look at, something for price to reach for, and that's really it. Okay, so just note that on your chart. Note these last two down close candles. This would be your bullish order block, so we could retrace back into here before expanding higher. I'm still bullish. PA to me still looks bullish. I don't see a reason for us to go lower right now. Looking at the 4-hour, I annotated yesterday right before the open how I wanted to see price come into this fair value gap real quickly and then displace higher. We got that perfectly. Right off the open, we opened higher, came back, closed the opening gap, and then came right into this fair value gap. Looking at the 1-hour, I also mentioned the breaker, which we perfectly hit. After we did the work here on the 4-hour and touching into the 1-hour breaker, there's really no reason for price to run lower. The delivery of it was super sloppy. The reason being why I just held no bias. I was like, you know what? I'd rather not get caught off sides today. I mean, if it runs for the buy side liquidity, fine. I don't really care. I actually already met my monthly goal, so I'm not even trading my main account this week. I'm just going to be using a little side account and having some fun with that while I wait for next month. So if you don't see me really posting too much profits or stuff like that, it's mainly due to because I've already hit my monthly goal. I don't need to be inside of these markets pushing it. I think that's the biggest thing when you're being profitable. People believe that if your edge is doing well, you need to push it. No, ICT said before, if you continue to use a blade and it continues to wear down, dulls out, why would you continue to push it? You need to reel it back, sharpen that edge again, and then go back into the markets. So during the pre-market New York session, I annotated this 1-hour for value gap. I wanted to annotate these down close candles. This is your bullish order block. We reached down into there. I know on the morning session, I actually pointed your attention very quickly to this fair value gap on the 30-minute. I didn't touch on it again, but it was something that, if you did look at, it was used very nicely coupled with the order block here. Last down close candle, if you take the dealing range low all the way up to the dealing range high, we were right inside of a nice discount coupled with that fair value gap. Look at the body closure, not the wick. Same thing, 15-minute, dug right into this fair value gap order block. Looking at the 5-minute now. So this is very hard conditions for me personally to annotate in real time, like trying to get you guys all this information, and especially what I'm thinking, which, heads up, I don't want to scare anybody, but I believe by probably next week, I'll be taking a step back from Telegram and really just focusing on the daily logs and maybe posting from here and there in the Telegram. I'll keep you guys updated, but I believe doing what I did, it definitely served a purpose, and I think you guys learned a lot. And I just believe it's going to affect my trading down the line here, because trying to annotate this in real time is very, very difficult. The only way I truly would really, be able to express all my thoughts and about the market in real time is if somebody was sitting right next to me, and that way I could express all what I'm thinking right there in the moment, because everything's happening so quickly on a 1 minute, 2 minute, 3 minute. It's so hard to be able to post and show what I'm thinking. So just a little side note there. Let me reel this back just so we all have a perspective of what was happening prior to the open of price. This is what price was looking at. We had news at 8:45 my time, so maybe 9:45 New York local time. If you're looking at this, I should go down to a 1 minute or a 2 minute, because these are huge learning lessons for the YouTube model. So I said I was watching the 1, 2, and 3 minute here, and I believe some of you went long on this, which really was not my intended thoughts. But even if you did go long here, you should have still went, profitable with the trade. And that's kind of the problem I have with Telegram, is it's so hard to express my thoughts and what I'm thinking. Like, for me, when I say I'm watching the 1, 2, 3, I'm just watching order flow, and I'm just watching how price displaces. It doesn't necessarily mean I'm looking to enter. So even if you went long here, I'll kind of draw out what the criteria was for it. But the reason why I didn't take this trade was for a few reasons. But let me go over. First, we ran out the sell stops coming into the open. We displaced higher. On the 1 minute, we had a market structure shift. We returned back down into this fair value gap, which from the dealing range low to the dealing range high, you're inside of a discount. Now, for me, with this YouTube model, it's very, very crucial. I'm looking at the 5 minute. The 5 minute, even regardless if the 4, 3, 2, and 1 all have a market structure shift, the 5 minute is telling the story for me. So I was looking at this saying there's no market structure shift yet. I was looking at the 1, 2, 3, but there was nothing in the 5 minute for me to really go long, which I even said that there's nothing clear yet. I was looking at the 4 minute. This, if I replayed it back, is sitting here. So even on the 4 minute, no market structure shift above that high. 3 minute, but for me, I need the 5 minute. Okay. Now, price displaced higher right at the news driver event. So here was 8:45. Price just immediately drives higher. And even if you went long on this fair value gap, your stop loss should have been beneath this low here. And you could have capitalized on almost 23 points regardless. Now, some people were looking at this and trying to go long, which I was annotating in the chat. I don't like this. I've seen this environment before, and I feel like it's just a false rally. And it became true. Because on the 1 minute, yeah, you have a market structure shift. We have a body closure above that high. 2 minute, same thing. 3 minute, no. 4 minute, no. 5 minute, no. Okay, there's no bodily closure. And even if we play out this next candle, it just, from experience looking at the charts, this doesn't seem like a market structure shift to me. And that's the reason why I was annotating in the chat. This doesn't feel like a long to me. I'm not willing to go long yet. And that's just mainly due to experience. I can't really describe it any other way. I mean, yes, we have a small bodily closure, but looking at the 5 minute, it just didn't seem ready to go higher. And I like having a 5 minute fair value gap that bleeds and is layered, from a 5-minute to a 4 to a 3 to a 1, and it's all inside of that 5-minute. So there's no 5-minute fair value gap. 4-minute, there was nothing there. 3-minute, there was a small one here. 2-minute, let me annotate what I'm looking at. And then there's one here. So that just didn't meet my criteria. It wasn't an A+ setup. It wasn't a high quality trade to me. So I just sat out. Didn't take any trades today. And once price displaced underneath this low here, if I reel it back, the reason I'm going to go back this one candle because it's super crucial for me. I was looking at this 5-minute fair value gap and I noted, okay, look at the 5-minute. You see how we had a full body closure underneath that low on the 5-minute? If you look at the 4-minute, 3-minute, 2-minute, 1-minute, okay? Now, sitting right here, if we popped up into that fair value gap, I was probably willing to go short as long as we went into a premium relative from the dealing range high to the dealing range low. If we popped up into there and then we went short, I probably would have took out, probably at this Fibonacci target here, but I was really aiming towards this 30-minute fair value gap. And as soon as we displaced again, I said I held no bias. I was already done. I was like, you know what, I don't really care anymore. And then we ultimately ran higher. Now the reason being, we took out sell stops. We're still, the overall narrative is bullish. You should only be looking really for longs if you're a new trader. So the sell stops were ran. And then we had a shift above the high here. If you go down to like a 1-minute, 2-minute, we had a shift above here. Now notice on the 1-minute, market structure shift, 2-minute, 3-minute, 4-minute, 5-minute, all bodily closures above that high. Now there's a fair value gap resting right here. If we take our dealing range low to dealing range high, that's inside of what? A discount. The 4-minute gave a really, really clear picture. There's a fair value gap here. And even if you wanted to do body to body here, just hit equilibrium. This down close candle is your bullish order block. Okay, and then we ultimately displaced higher. So that would have been the best trade overall, knowing that our overall draw on liquidity is 38.07. That was our overall draw on liquidity today. Okay, and we eventually displaced above it, ending the day above that high. So that was today's price action. It's one of those days coming off of a Friday where we had large expansion on a Friday. Then we had a large opening gap. It creates a Monday where it's not as probable. Large range days usually lead to consolidation or just very sloppy price action. So overall, it was a great learning day. Even if you lost or even if you won, go ahead and definitely log it away. One other thing I wanted to note, I also put this in the chat. The S&T divergence was a huge factor. Looking at US 500, we made a higher low here. US 100 was making the lower low, and US 30 was making the higher low as well. So it's a bullish S&T divergence. That should have signaled you to start looking for longs, and that also was coupled with that 5-minute setup that I showed. So a lot of good confirmations to go long. I'll update in the chat tomorrow. What are my thoughts? And until then, good luck and good trading.